Hey everyone. So in this video, I'm going to go through what Rivian's CEO sees as its market opportunity ahead, and I'll give you a little hint. It's massive. The CEO sees a massive market opportunity ahead of it. So without further ado, let's get into this brief video discussing Rivian's market opportunity. In the it's likely to be larger than the number of IC units over the next decade, right? So there's about 1.5 billion vehicles in the planet today. The vast majority of those, 90%, are combustion powered vehicles. 1.5 billion. That's huge. And if you think about it, eventually all of those need to be converted into electric vehicles. Not so much, not even thinking about consumers want that, but governments are more and more mandating that the cars being sold are electric vehicles or alternative fuel vehicles. And so these 1.5 billion cars, as they get older and they need to be swapped out, they need to be convert in the next 15 or 20 years. It's a massive market. So EVs have to populate a lot of different segments, create a broad portfolio of options of customers to drive that shift, right? You have to create broad portfolio. So you have to have two-door sports cars, four-door sedans, economic sedans, luxury sedans. Gotta have SUVs, pickup trucks, three-row SUVs, two-row SUVs. You got to create a broad assortment of cars out there because that's what consumers are looking for. Every consumer, every family has a specific need. Right now, that's being filled by ICE combustion vehicles, right? So if you want to convert them to EVs, you got to have the EV option for every ICE, nearly every ICE option that exists. But so the thing to keep in mind is there's new revenue streams that are emerging around services. And a lot of these are tied to creating more direct relationships with customers. So this is something that was not really so apparent with ICE vehicles. There was some service sales attached to traditional cars. People were buying Spotify and XM radio through the dealership, or maybe buying service repair agreements with the dealership, upgrade agreements, and things of that nature. But with EVs, they're more so increasingly tying in services and software updates as part of the vehicle sale. So more and more these EV companies are willing to take lower prices, take lower profit margins because they're expecting in the long run to have greater profitability from those software sales, from those upgrade sales, from those subscriptions. So there are real services that are going to start to merge, and the role of insurance, which links to self-driving, both of those offer software-based or usage-based revenue opportunities that are quite significant over time, quite significant. So not only does Rivian see a massive opportunity in terms of unit vehicle sales, right, the number of cars sales, but also the software, the services that go along with those cars. That's an also massive market opportunity that could be worth thousands of dollars per car sold. And remember, those software and services upgrades and sales are incredibly more lucrative than actual vehicle sales, right? Rivian will be lucky to sell each car at a gross profit margin of 25% when it reaches its full maturity, right? It will be lucky to be able to do that. Whereas with software and services sales, profit margins in north of 75% are very, very likely. So you can make triple the profit margin from software and services as you can from selling the actual car. So even though you might not make as much revenue from software sales, when you think about the actual bottom line profit, it could make just as much of a contribution to your profitability as a vehicle sale would. So, a truly massive opportunity ahead for Rivian, and I agree with Rivian's CEO that this opportunity is huge. And if the company can execute, it can capitalize on a big opportunity. Alright, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.